Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, November 5th. We've got some great action developing here. As I indicated last week, after some quiet, choppy trading last week, I expected the markets to break out into some major moves this week, and we've seen that occur most acutely in the gold market. So let's take a look at the chart here. Gold, after pulling back last week to support around the 1,025 level, has skyrocketed to new highs. You can see it here on the chart, thrusting straight up to $1,092 as I record this video, just shy of $1,100 per ounce. That's a new all-time record high. Some of the fundamental news that occurred during this technical move, this thrust higher, was a report out of India that India bought some 200 tons of gold from the International Monetary Fund as part of their efforts to diversify away from the US dollar reserves. That's surprising news to many people, not to me. I have talked about it in the past that India and China would be diversifying away from the dollar and be substantial buyers of gold. So I'm not surprised by that, and I think you'll see more news like that in the future that will help to drive gold much, much higher. There's a shot that gold could get up to about $1,150 in the next several days. I think that would be about the top of this move before we see another pullback. But there's no doubt in my mind that gold's next big move up has started, and ultimately within a couple years' time we will see at least 2,100, probably 2,250, 2,300 an ounce. In other words, gold can double from here. We've also seen some pretty wild action in oil. I'm going to pull that chart up here. With oil rising about 9% in October, then this pattern here looks very similar to gold, pulling back sharply from around $81 to $76, and now thrusting higher back up to the 80, 50, 80, 60 level. Oil, you'll notice, has not made yet a new high, whereas gold has gone up much higher here in this chart formation. I expect oil to follow suit and run to new highs going into the end of the year. We could reach $100 a barrel by the end of the year. The dollar has interestingly rallied a bit this week. Not much. It's lifting its head. But I say it's interesting because the rally in gold to new highs has occurred with pretty much a stronger dollar this week, which is interesting. That means that Europeans and others are flocking to gold more than they are flocking away from the dollar. And that's one of the true signs of a bull market. A really true bull market is when the underlying asset is appreciating in terms of all currency prices, not just one particular local currency, not just in dollars or in euros, but in all currencies. And that's what we have in gold, which makes the bull market in gold exceptionally strong. Stocks have pulled back, basis the Dow Jones, to about 9,600, 9,680. We should find the Dow stabilizing in here and preparing for another leg up into the early part of 2010, where I expect we could get as high as 11,600 in the Dow. The Federal Reserve has been pumping money regardless of what they've been saying. They have been printing money like crazy. The latest monetary base figures out of the St. Louis Federal Reserve shows that the Federal Reserve is printing money at a faster pace than ever. So that's consistent with my thesis that they are going to inflate away that debt, the mountains of debt that exist in the United States, no matter what it does to the currency, and print money like crazy because they want to lift asset prices. It's do or die for the Federal Reserve. Either they lift asset prices through an inflationary monetization process, or that mountain of debt in the United States is going to just collapse. And I hate to say what it would mean for the U.S. economy. If you think the last couple of years were bad, if the Fed is not successful at continuing to print this money, and inflating assets, it would be a heck of a lot worse. And I do believe they will be successful, partly on their own merits, but partly also because investors worldwide realize that the printing will go on ad infinitum. So we're crossing that threshold now from the deflation of the last couple of years to a possible runaway inflation via currency depreciation. So stay tuned to these markets, and there's going to be a lot happening in 2010. Until next week, this is Larry.